The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting for Larry Pesavento. Larry's away in the next week or two, and when I can, I'll try my very best to be able to guest host. And of course, trying to wear Larry's shoes is a tough thing. He does some fantastic work, and we'll just do our best right here. The Dow is down 10, having come back from being much sharply lower. Having tested the 16,200s, and the S&P, same thing, having been down over 9 points. Now it's only down 2. It's 1865. Dow's at 16,338. The comp index is up 6 at 4313 on this, the 12th day of March. And what I think is really important here is when you're looking at the E-mini, let's go to the June one just for the moment. I'd shown my subscribers to my opening call that the 200-period exponential moving average plus what I call a left side, right side price time match coming to 10 o'clock this morning at the 1846 level would be very important to watch. If the 1851 support went, well, it broke down and it went to what? 1846.75, and this 200-period moving average knows nothing about trading in 25-cent increments, so it says 1846.31. And so that, I thought, was a really nice signal to say there could be a bounce. And yes, there was a bounce. The bounce went all the way to 1861, and then it pulled back, held the 9-period moving average. That's the black line if you're looking at my charts on Tiger TV. Let me just expand this a little so you can see what I'm looking at. And now it's trying to walk this line. There are signs to say that there's a lot of resistance. The selling pressure is still there, while at the same time, you know that the buy the dips crowd, who have been 100% correct for almost 5 years, are going to keep doing the same thing. And until the E-minis, this is the June right now, starts to break and holds the low of today, which was down at that 1846 level, and then starts to take it out to give back the recent gains just from the 3rd of March to the high that was made on the 7th, 3-7, let me put that in, 3-7, that was made on the 3-7 of March. The modus operandi has been to buy the dips and pat yourself in the back and then look around and turn around to everybody and say, ha, I bought the last lows and I'm looking great. Everything about what we're looking at here, based on my work, says that the patterns that we're looking at, remember, Larry loves to look at chart formations, and the expression that we both have is that patterns repeat, just like human nature. What are these price points here? These price points are a measure. It's basically each price point is a time freeze of human emotion. It's a conglomeration of human emotion. It doesn't tell you how many shorts. It doesn't tell you what the volume is. It doesn't tell you anything. It just says right now the E-mini is trading at 1857.75 because that's what people are prepared to pay. I mean, you couldn't make it as simple as that. More simple as that. So I want to leave it at that. And now I want to add the technical picture. The 9-period moving average, exactly where it's sitting on now in the daily chart, is different to when the price was going to the all-time high at 1880.50 on the 7th. The MACD was very strong. The moving average convergence, divergence, I know Larry doesn't use that. And the slow stochastic. Now, if you really want to learn about these particular technical tools, what better time, especially when for the first time since the breakout on the 11th of February, when 1812.25 was hit, the fast moving average, that green line, broke out and gave you a terrific opportunity to grab the upside, while the slow stochastic was over 80%, which is very positive. So those are the techniques that I'll be teaching. Why would it be important to learn them now? Because for the very first time, we're looking at the potential for the weekly charts to be giving signals in many of these. Let me just show you right now. If I'm looking at the Dow, cash Dow, type it in correctly and you get it correct. The weekly chart has a much lower MACD than it had when it hit that high of 60,588 December the 31st, number one. Number two, the MACD made an M-shaped pattern, but was lower on that second move up than the peak C that it made at 60,174. Not a good sign. And look at the sharp decline to 15,340 that was made in that January into early February sell-off. And now you've had a retracement where the stochastic is still under 80% and the MACD has the potential to break out, but boy, it also has the potential, that green line, this is the middle chart, the weekly, the one on the left is the daily, one on the right is the monthly. This middle one says, be a little bit careful here, because if in the next 3 to 5 sessions, the S&P, the Dow, starts to go under 16,205, especially if it closes under there, that's going to be very negative action and suggest that we've got time and price to the downside. And that will also set up the weekly chart peak D saying, uh-oh, at peak D in the Chapman wave, we might not have the kind of peak D top that we had at 12,876 in May of 2011, where it pulled back down to 10,404, 2,400 points. But we certainly could have a pullback to test the 15,769 9-period moving average in the monthly chart. I'm watching this real closely, and there are a bunch of reasons. I went through some of them yesterday. Now look at this. I'm going to go to the S&P. I know most of you would be looking more at the S&P than the Dow. I've just done it for so long. That high that was made on the 7th of March, 3-7. At 1883 says, if you go 1 penny above 1883.57, you've got a new leg E to the upside. Oh, we could have recycled to an A, but I'm calling it an E. And that will recycle the weekly, and it would be very positive for the weekly chart, because it would help the MACD to cross positive, and it would certainly help the stochastic to stay in the 91% area, which is really important. Look at this, the weekly chart of the S&P, which made an all-time high. The Dow failed to do that, is at the Dow is at 75%, below the 80%, which is necessary. The SPX, on the other hand, is way up in the 91% area, and that is positive. That's the reason why I don't think that this is a major sell signal to sell mode that we're getting. I think it's a consolidation. And as a consolidation, I'm suspecting that when or if the Dow starts to break the the S&P starts to break the 18, what was the low today, 1854 area. If it does break that, then the most important thing is, how does it handle the next support of 1834? I like to go from support to support, or from resistance to resistance. If it isn't, because it's all-time highs, you have to use other techniques, like the S&P as a weekly chart with an up channel, a powerful up channel. Not a single thing wrong with this up channel, except it failed to get to, as it always does, always has done previously, to that red line, which now is at 1898 as resistance. And when I start to see previous resistance become a repellent even earlier than it should be, it's just a heads up to say, hey, be a little bit careful over here. So that's that. And the question that Dan Scott B asked, stochastic hidden divergence on the dips, in some cases, yes. I wouldn't say hidden in the sense that it's right there, we can see it. But yeah, a subtle, let's call it a subtle heads up to say, there's no real veracity. But wait a minute, the NYA, the very broad New York Stock Exchange, has in fact in the stochastic gone to 89%, and that's good. The MACD is it's on the cusp here of possibly failing. So this says be very careful with that peak F6 highest peak in the Chapman wave, because at that particular point, you're going to have to watch really closely. If there is a drop that tests the left side low in the NYA of 10,276 made on the 3rd of March, just a week ago, that's going to be a negative. And then you've got that major up channel support line, and that channel support line comes in, depends when, but it comes in around about 10,200, 200 points lower. What happens on the upside? You need to see it close decisively back above the 10,433 level where the 9-period moving average is. Now let's do a couple of other things. The spectacular move. I call it a spectacular move in gold because it broke out of a pattern that was actually consolidating beautifully on the 9-period moving average. I call this walking the 9-period moving average. We probably won't get into it in my workshop coming up a week from tomorrow night, Thursday night. Thursday night, the 20th. Go to the front page of TFNN. You'll be able to get my service, the opening call, for a month as a test. Cancel any time. I mean, a month. You know how many charts, you know how many decisions we make in a month? It's amazing. And this is a period where I'm starting to look more and more at the short side. I went through the whole thing with the airline index yesterday. Look at that big move to the downside of the airline index. I showed the home builders. I showed the HGX index. Look how they got smacked. So it's going to be really important to be looking at both sides of the coin, but more on the short side in this particular phase. That's what I'm looking at least for the shorter term. But look, the 200-period moving average, that's that let me see in Tiger TV what you get. It looks kind of grayish, kind of golden. It's a thicker line. That's the 200-period exponential moving average. The black line right there, that black line is the 9-period exponential moving average. They've crossed. And when they cross, usually what you do is you get a nice bounce. And then, as everyone says, confirmation of a shorter-term moving average crossing a longer-term moving average, you'll suddenly see it reverse back down. But what I'm looking at here is that 200-period moving average, which was tremendous resistance, has now become support. That is really important. That support says that 1335 might be a magnet area, but it's also a fabulous safety net, because if you go in the trampoline, if you hit that level, you might pull back just a little bit more, maybe 1332, 1331, but there's a good chance it's going to spring you back up towards the 9-period moving average. Right now is at 1344. But with gold up 19 at 1366, there's a pattern that I talk about, the leg, the body. In this particular instance, what I'm looking at is that there's a chance that we're within, maybe a day or two of gold starting a pullback. Doesn't have to be a big pullback. Might have made the high today a peak after the Chapman wave, the 6th highest peak. I'll talk more about it. I also want to go through something that was asked earlier on in my show, which is normally at 11 o'clock till 12, the Tiger Technicians Hour, about when you start leg A. I'll be back in a few minutes.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman, sitting for Larry Preservation. I had a question earlier, and I'm going to do this right now. The question was, after you've made a top, so let me just do this, finish this up quickly here. Call this... Oh, whoops, that was not right. Okay, I'm going to just type that in A, B, C, D, E. Not just to a D, but an E. What happens? How do you start the wave count? So let's do this. A, B, and we don't know what's going to happen next. So let me expand this, and I'll explain as we go along. Right there. So we have a price point. This is the E-mini. No, this is the Euro, EUR-USD. Doesn't matter what it is, but that's what it is right now. And it's on a 5-minute chart. And we've come down from a high of 1.38605, made it 250 this morning. This morning, 250? 250? Must have been on the 12th. 250. Yeah, that's right. 250 this morning, 10 to 3. And we've come down. And then out of the blue, it makes a low of 1.38426. The very next bar turns around, has a higher low, but it also has a higher high. So higher than the bar before. So I can put an A. I call it a gray A because it is way under the previous highs. I don't know if it's going to succeed or not. It's just a retracement mode. I actually call it a retracement failure mode because it fails until it makes a new high. It's just an explanation. It's not a negative. Then the next bar is even higher with a higher low and a higher high. So that's called a floating ladder. All I do is I move it to the next bar. Then the next bar goes even higher. It goes above the 9-period exponential moving average. The stochastic, let me move this a little higher. The stochastic has gone from under 20% and it's moving higher and it's gone above 20%, just a tad above 20%. Then what happens is that it makes another high, goes above the previous one, which means I can keep it as a gray A, and the next bar does the same thing as well, but it's a very wide-legged bar. You can just see it. I'm showing it to you. I'm looking at the Tiger TV. It's as clear as I can make it without giving you the evidence beforehand. And then what happens is that bar, normally what I would do is I'd grab the top, I'd grab the bottom, and I'd draw a rectangle, because a long-legged doji like this says, hey, I'm giving you clear parameters. Watch out. If I take out the low bar, I'm going even lower to retest that original low, where I've got a trough B on the way down, troughs, remember? But it says if I take out the high and I close above that high, that's really important, because it makes only the body of the candle support. You don't have to go into the wick. Well, what happens is it goes higher, but it doesn't close there. So it's saying, I'm getting a little tired. I'm still hugging that 9-period exponential moving average, walking the 9 EMA, but at least trying to. And look what happens. It continues higher. Now, in the futures contracts, this trends like this for leg A can often be quite extended, and then it just makes a very quick BCD. And we'll watch this closely. Look, there's your peak A. Why is it a peak? Because you see the red candle? You see how it's testing the body of this candle right here? So now let's watch it. You remember what I was talking about before I even knew? Let's see what happens here. It goes into the body. That's negative. And that says, watch out, because if you start to trade underneath half of the wick of this particular candle, underneath 1.384, you could go to the low and retest that whole thing. And instead, what happens is it does everything. It goes, it almost tests the bottom, and it closes very positively, but under the 9 EMA. Then it starts a brand new move, and it goes 1 penny, 0.0001, above the 38.536 high of the 12th, starts leg B, of the 12th, it's all the 12th, B. And now what do we have? We have leg B, and leg B goes on and on and on right to there. That makes peak B, and this is very important. You see the long wick? Once again, it's saying, hey, you get into the body of that wick, we're going to try to test the lows. And what does it do? It tests the lows and it breaks the lows. But that maroon line, it's actually maroon. You can just see that it's maroon. The MACD is holding well. The stochastic's actually holding much better than it was before. So there's still some internal strength. And now we watch closely, and what does it do? It makes leg C. So the funny thing about the Chapman wave methodology is it might take you from a trough to a leg D, but it sometimes can be very whoopy. I'll be right back. Dow's down 31, S&P's down 4.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and I was just showing that where did I put it? The euro dollar, and the objective in the Chapman wave methodology is to go from an identifiable low bar to at least a peak D. And sometimes it can be very whippy, which is one of the reasons why I always like to start off with a position and then we add a trading position. We did that on a, I missed the caller. I'm so sorry. Audrey, I'm sorry that I missed you. I was just busy at all these other things. The 5-minute chart did go to that peak D, and then there was a sharp drop, and in fact, it recycled up, and it's gone to an F. And that F in the 5-minute chart is right there, and I'm going to do, Audrey, I will do the stock. Oh, well, let me just do it right now. Hold on. So GC, was that GC Gold? GC Gold, whoops, it must be. Audrey, I wonder if you can call again, Audrey, if you have a chance. I'm real sorry I didn't see that, and I really love taking calls, and I'm not sure what I was busy with at the time that I didn't actually look at my screen, but I'm going to do that. I believe that you want to look at the GC, the gold contract, so let me just do this. In the gold contract itself, now I don't know if you have a position in the gold contract. I'm going to assume that you're interested in it. I'm not going to presume anything whether you got or you don't have. I'm just going to say, in the gold contract itself, one of the reasons why, personally, every day I was looking at it, and every day I thought, I'm beginning to want to buy the GLD or the equivalent of the GLD, that's the Spider Gold Trust, because I'm liking the action in gold. I was just confused that the gold stocks themselves were not participating. And then it struck me last night, and I had it on my list. But gold had already spiked up about $18, $15 this morning by the time I was going to get my report out. And that is to say that I believe we're looking at a situation here that says that gold internationally is becoming right now a safe haven. Just like we look at bonds when the market's going down, money migrates back into the safety of bonds because bonds tend to go higher, yields come down because the market's coming up. The market and yields will go together. Yields come down, market comes down. Well, in this particular instance, what I'm looking at is that gold, the way it's acting, especially in the weekly chart, especially with the MACD. Remember, I've got my workshop coming up a week from tomorrow. I'm going to be discussing this. You see how I'll give you a little lesson right now. You see in the weekly chart of the gold contract, this is the June contract, you see how it spiked up. It went peak A. Now, let me just do this. I'll explain. There was a trough made in the weekly chart on the 28th of June of last year at 1190.40. The price turns around with the slow stochastic and the MACD, and it looks great. It goes to a peak A, and then it goes to a peak B. But then that peak B fails and comes down under the 9-period moving average, that black line. Well, wait a minute. The MACD is looking great. The stochastic was looking great right up until about the week of the 13th of September. Now, this is something that I'm going to teach you. What number of bars, what do you look for in the stochastic to tell you that there could be a single leg A up, or even in this case it's two legs to a B? Failure pattern that looks like the Eiffel Tower. What is the Eiffel Tower? Looks like an uppercase A, goes straight up, and it comes straight down. So let's do this. There's your example right there. And you can just grab it and squeeze it right there. There it is, the A pattern, up and down. And then the big test is, can it break under 1190.40? What does it do? The week of the 12th of December, it goes to 1189. Oh, it is $1 under. But then it closes above again for the next week. Then it goes to 1186.70, even lower. That's the pattern that I call the H pattern. In my CD introducing the Chapman wave methodology, this is what I discuss. It's really important indicator. I drew it earlier on. I can't remember why I drew it. I drew this pattern, and I said, oh, that was the volatility index. And I said, if there's a successful H pattern, and you get a trigger of a new buy signal to buy mode in the technicals, because the price, look how the gold contract made a new low. Hi, Audrey, you're back.
Yes, hi, thank you.
You'd like to look at, I'm so sorry that I didn't see you at the time. Well, you'd like to look at?
Well, you made a comment in your program today that I just wanted to find out how exactly you determined it. You said that the gold contract would probably do a short-term high, either it did today or it will in the next day or two. And I'm just wondering what technical tools you used for that decision.
Okay, so let me just quickly finish this thought here. In the H pattern, the lowercase h pattern that I'm looking at in the weekly chart, if there's if there's a test of the left side low and it doesn't close below the left side low, and you get a signal that says that the actual contract, the technicals, the stochastic and the MACD are actually moving higher, then there's a chance that not only will you take out the left side peaks, you will actually go to the major arch high, and that major arch high is at 1431.70. That's on the weekly chart. Now let's get back to the daily. Now what I'm looking at in the daily is that, here we go, I'm going to expand this out a little bit. Gold is up 21.30 at this particular time. I'm a little behind, but it's up over 21 points, and it's at 1368. Well, one of the things I'm looking at here in the weekly chart is that I've gone to potential peak F, but it could have recycled, and I don't know if it's going to recycle. If it makes a new recovery high, I have to consider that that could in fact be a B, and that means that we could rally into tomorrow, maybe into Friday morning. So this is what I'm looking at. And one of the reasons why I said that I think we're getting close to some kind of, at least a short-term top that says you could pull back, and the pullback would be, we're at 1368, so it would be about 25 points or so, which sounds like a lot, but not when you're moving up this quickly and this strongly. One of the reasons why I'm saying that is that the MACD in the 120-minute chart is getting to, it's giving me a signal in the histogram, and the histogram are those vertical lines that says that even though the fast-moving average is moving up very sharply, that there's a really good chance that the histogram is starting to stall out a little bit, and that it should start to contract very soon. That's number one. I'm anticipating that the stochastics at 88%, making these quick moves above 80%, which it then gives back, and it's done that enough times that it's saying to me, there's a chance it could do that again. It also says in the on-balance volume, the blue line, if you're looking at Tiger TV, this is the 120-minute chart, that we're now in leg D. And very often in leg D, in the on-balance volume, it's saying, be somewhat careful here because I'm becoming overbought based on my own criteria, independent of what's going on in the price that you're following. So in this particular case, if there's a high above 1369.20, and we're right now at 1369, so it's just like an eye blink away from breaking out, then I have to anticipate, I'm sorry, this is the 120-minute chart, there's a chance that we've recycled, and this could continue up into about another 6 to 7 120-minute bars, maybe 5 to 6 120-minute bars. That might even be overnight. Sorry, you were going to ask a question?
Well, I was going to say that it actually already hit the active gold contract hit 1371.3.
All right, so then that's recycled, and I have to consider that's now G/B in the 120-minute chart. And as of right this moment, I still haven't got any signals on the 120-minute chart to say that there's a turnaround. I'm saying I've got signs that we're getting close, but I haven't yet got it. That's number one. Number two, if this is a fear factor, and that's going to be something that's, when you get to fear factors, the price very often knows nothing about charts, that you might be getting to a little topping action. As we saw with the battery stocks recently, they can continue for quite a few days, just pushing higher and pushing higher. So in the gold contract itself, I would have to go to something like, let me just grab a, so you're already at 1371, you say?
Yeah, the high was a few minutes back 1371.3.
Okay, so I'm a little behind, and I just want to grab a shorter time frame. Let's go to... Now, is this just a question? Do you actually have a position?
Yeah, I do. I was just curious because we just broke out. I subscribe to your letter. I'm a new subscriber. And we were saying it's a breakout, which obviously, everybody's been waiting for the 1361. And that's why I wondered why so quickly you thought it would pull back, right?
Okay, I have to make it real clear. I'm talking about the 120-minute chart as a pullback. So that could just be a couple of days.
Okay.
So when you're talking time frames, for instance, my daily chart has turned the 9-period exponential moving average, as you can see both here, and I did show the chart, I think, 2 days ago, and I drew that yellow, I can't remember if I did it just today or yesterday, but I drew a yellow oval pattern around it, and I said neck, and this is the body, and we've broken above the body high of 13, the high of the third at 1355.30. And now what we're looking at is this is the neck, and that neck can continue a little while longer. But most importantly, if there is what I call the fear factor that gold has become a harbinger of safety, and this goes back the thousands and thousands of years where people In the United States, we really know nothing about it, but most other countries at some point have been at war, and there was a period where people, I know that from my wife's family, they did not survive the war without having some gold in their shoes to be able to pay people off. Otherwise, they wouldn't have survived at all. That was the only medium of payment that they could have. Not only that, they were in different countries. So that goes back thousands of years. And that's what I think I'm looking at here in the gold contract, which is why I was real upset. I wouldn't have been able to get it. I wanted to buy the equivalent of the GLD because I thought, you know what, this is held so well, and we've got gold up this morning, but I wouldn't have got it. But in fact, it's saying that something's going on, and we mustn't ignore it as just, oh, gold is moving higher. It's not just gold is moving higher. Everything about gold, the action from when it made the high of on the 25th of 1344.10 in the June contract, right there you should have started to see. Normally you would see with the 200-period moving average, you'd see a deeper and longer consolidation. Instead, it consolidated for 4 days, went to a new recovery high, which I call E. It really now should be E/A, and this is F/B. If it's F/B and it turns out to be leg B, we've got a long way to go in the daily chart. And that's why I'm saying any pullback should be, based on the 120-minute chart, should be reasonably short, 1 to 3 days. I'm thinking more like 2 days at this particular rate if it does pull back, because it looks, from everything I'm following, gold stocks themselves were not doing all that well. And when you see the gold contract moving, and the gold stocks, actually today there's some that are following, but not all of them. Look, even gold, Rand Gold, even Gold Core is moving. So it's very selective. Some stocks are moving nicely, others are not. And the ones that are moving nicely, like a Gold Core, is traditionally a stock that you would see kind of participating with the price of gold, and it is right now. So if Gold Core GG breaks out above, it's at 27.65. If it breaks above 27.90, it's going to say that's a downtrend resistance line. If it does that, there's a good chance of testing the 28.13 high of the 14th. And if you're looking at the weekly chart of Gold Core, now that wasn't your question, but I like to introduce into one's thinking that there are certain stocks that are sometimes leading stocks and sometimes they're just participatory stocks. And in this case, Gold Core is acting beautifully. It's holding well right there with a 1, 2, 3, 4, basically a 4 to 5 week sideways consolidation in a very narrow range. If it breaks out, that's almost like a fulcrum, and it could be a nice move to the upside. So I wanted to go through it about as thoroughly as I could. Now, there's one other thing. Now I've caught up. I'm at 1370.60 in my contract itself. But most importantly, if I'm looking at, that was the wrong contract, GCM.
Oh, you're looking at M. I was still looking at the J, the April. Okay,
I wasn't even sure. Well, I haven't got J notated at all, but they should be, they're the same. There's really very, very little. Look, the J is at 1370.60 right now, and my M is trading at 1370.60. They look the same.
Oh.
Okay. So you want to hold on a moment?
Okay.
Okay, so I wanted to show silver as well. I'll be right back. We're looking at gold and silver with Audrey in Sacramento, California. I'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin, here on TFNN.
Hi folks, we're back. Basil Chapman sitting in for Larry Presidente. We have Audrey online and we're looking at the gold contract. I'm looking at the 30-minute gold contract from the low bar of, that was on the 9th at 11:30. It made a low of 13.28. This is the June contract I'm looking at. And then it went peak A, pull back, started a brand new buy mode. It went to peak A, B, C, D, E, pulls back sharply, starts a brand new one at 21:30 on the 10th, and goes A, B, C, D, E, F, pulls back sharply to trough D, starts a brand new one on the, I got to go to the date, right there on the 11th at noon, and it goes peak A, B, C, D, pulls back, and now it's A, B, C, and I'm expecting that it probably will go to at least a D. And that's the 1, 2, 3. This would be the fourth buy mode in the 30-minute chart. My suspicion is that we are getting close. Within maybe by tomorrow morning, we could start to see some kind of a pullback, or maybe a doji candle and then a pullback for Friday. That's the way I'm looking at it. But if it's a fear factor, it could go much higher. If I'm looking at the silver chart, SIK, I'm going to, I think it's the K. Whoops, wrong thing. SIK right there. SIK. There we go. The silver is lagging terribly. Yep, it's got a very nice candle today, but it went to the 200-period moving average for the first time in ages at a peak D, pull back to trough A, B, trough B. Now it's trying to rally. If silver can get over 2160, then I'd say 2190, the 200-period moving average, is a possibility to go to. But if it starts to fail, boy, silver in the next few days must not break under, I don't think it will, but it mustn't break under 20.61, and that's with the May contract. So I wanted to do the two together to say this is very selective, and as a result, my thinking is that I like gold very much. I like it certainly through at least, I think, March, might even go into April. Later on, I'll talk about going to lower lows. But right now, this is very positive action in gold. So that's what I wanted to say. And if you are long, my thinking here is that I'm not sure. I take a little bit of profits, but I'd probably want to plan to put the profits back. If you don't mind, I'm going to the June contract again. If it tests anywhere between 1351 to 1342, somewhere in that area, I wouldn't be surprised if it's just, I'm going to be watching it closely, because how it comes down, if it even comes down, is going to be very important to see if that's an opportunity to add, because the weekly chart is not really taking a break at all, and the stochastics at 91. So it really is very positive. So I hope that helps you.
Yes, very much. Thank you so much, Basil.
And thank you for calling. I do appreciate you being a subscriber, Audrey. Thank you very much. So, folks, just talking about subscribers, only subscribers will be able to come to my webinar a week from Thursday evening at 6:30 for an hour. It'll be going through the MACD, the moving average convergence divergence, and the slow stochastic, which I show all the time in the charts. I show subscribers every single day. You'll get, this is very unusual, you'll get a month free of my opening call, and I just, all I can say is a perfect time for studying techniques, for getting positions, for looking at the different sides. In this particular case, I'm looking at more the longer side for at least gold, maybe gold stocks. I'm not yet sure. I'll have to do an analysis tonight, but certainly short side and many of the stocks. Hey, look at this. Look at Google made a peak D, GOOG. Very nice bounce today from the low, but it went all the way from the 1288 level down to today's low of, should have it right here, 1184. That's 100 points. So I think that we're looking at a consolidation unfolding right now. There's a nice bounce occurring. That bounce could go into tomorrow. But I'm thinking lower lows and lower highs. But to sustain a down move, you have to have bad news and the volatility index climbing to at least the 16s. Thank you for being here, and I appreciate that. I'm sitting in for Larry, and I'll be back for my show tomorrow morning. Check out the front page of TFNN if you want to become.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.